especially a bad French accent. Today we will be doing chapter 19.
When you've actually taken French course, the bad French accent's even funnier.
Yeah. Here's the thing about French accents is everybody says they're sexy. That's a lie. All right. So we're going to look at, so in the last chapter, they just sort of told us how like the overhead from the support departments. So support departments means departments that aren't the actual production departments that are making the stuff. They would just say like this percentage of it's allocated to this, this department and this percentage to this. And then you took that amount and you allocated it through the activity basis. Okay. So this chapter is about how you go about doing that, how you allocate the support department overhead, right? How you decide how much goes to each department.
I feel like that's still been a very good.
Sure is. And so there's actually 3 different methods they'll talk about here, and 3 different methods plus like 3 or 4 other ways of looking at it. So it really, that's the thing with managerial accounting as opposed to financial accounting, is there's a lot more flexibility. Businesses can figure out how they want to allocate those costs themselves, because these allocation numbers really are just internal. They're for us to figure out our total cost.
Actually just cost.
And how to produce the statements that are used for external users to see, like banks or the IRS or whatever.
Yeah.
Right. So this is kind of like a review, something we already know, which is we have like our production departments where we do the conversion of materials and assembly and packaging of stuff. And then we have our support departments like human resources or accounting, or even like some places have a medical aid office. I don't know. I guess you probably have to have that at I bet you Freeport, where you do work that's potentially dangerous, you have to have medical people on site, as an example. They have a cost, right? I know my son's an EMT, and well, now he's moved up to Flagstaff where he's going to school, but he was an EMT over in Greenlee County, and they would seriously sit there, 24-hour shift, making $15 an hour, and maybe get one call out in a 24-hour period.
That one call, everything's going wrong.
Well, sometimes it seriously is somebody who had some pains in their chest and weren't sure if it was something serious or not. So you run out there, drive them to the hospital, and they're fine. But that's the nature of emergency medical services. So these are costs that are not directly, we can't directly put them on any part of production, right? So they become overhead. And so again, this chapter is all about how we do that. So the first method we're going to talk about is what's called the direct method. The direct method, cost is not allocated between support departments. Instead, we just allocate in essence, we get all the support costs together, and then we spread them out between the production departments. Yeah, exactly. That's a good point. The people who make these decisions are overhead. You're like, overhead makes it sound like you're not important, right? But like the president of the college, he's overhead to the college. He's this cost that we have to have, but is he really? Yeah. Which part of your friend group are direct costs or direct value, and which part are just support? Right. All right. So this is Decker Tables Company. They have 2 support departments, the janitorial department and the cafeteria department. And they have 2 production departments, the cutting and assembly department. So I think they're keeping this one nice and simple for us. So here's the process. Step 1, the cost for each department is determined by identifying costs that can be traced to the specific department. So that's, in real life, that's just adding up the receipts, so to speak, right? How much did this department cost this month? So the janitorial department costs $310,000, cafeteria $169,000, cutting $1.504 million, and assembly $680,000. So that's the first step. And then actually, in all 3 of these methods we're going to look at, this first step remains the same.
Would that be like wages, materials costs?
Mm-hmm. Right. All costs of the janitorial department. So mostly, I would guess with janitorial work, primarily human resources is going to be your biggest cost, and then supplies, right? That's going to be your second biggest. Step 2, an appropriate cost driver is determined for each support department. So for this company, they decide that the more square footage that's needed to be cleaned, the higher the janitorial costs. So they're going to use square footage to be serviced as the cost driver for janitorial department, and then the number of employees in a department for the cost driver of the cafeteria department. That's, again, that would vary from one company to another and from one department to another. Again, step 2 will remain the same in all of the methods we look at today. Yes, to determine the rate. So in other words, if you're like saying, look, we have janitorial services, we have janitorial services here on our campus. Someone keeps these rooms in this building really nice. So one way to decide how to do that would just be to be like, how much square footage does the business division occupy? And say, take in essence the overall cost of janitorial for the whole college, and then apportion it out by square footage that each department occupies. That'd be one way to do it. Okay. Right. And there's more than one. You could just say, business division has one building and we have one full-time person assigned to the building. So all of his pay, I mean, there's more than one way to do it. All right. Step 3, the usage of the support department cost drivers by each department is determined. So interesting, think about this. These overhead departments, they also have to be kept clean by the janitorial department, and their employees also eat in the cafeteria. So we're going to apportion some of their costs also to them. And so these different methods kind of decide, are we going to try to apportion it to them and then reapportion that cost out to the operations department, or just go straight out to the operations departments? Okay, and I'll show you what I mean by that in a minute. The cafeteria department is 5,000 square feet. It's actually the biggest department there in the business, cutting, assembly, and so forth. So these first 3 steps we're going to use in all of our methods. Step 4, the percentage of usage of support department cost drivers by the production departments is determined. So in this case, we'd say cutting department, they have 1,000 square feet out of 5,000 total square feet. Now there's more than 5,000 total square feet, but there's only 5,000 square feet of production department. So for this direct method, we're just considering the production department, not considering the support departments. Okay, so 20% of all janitorial services are going to be charged. So using the direct method, we don't charge anything to the support department itself. We just charge it directly to the production departments. So 20% of janitorial services will be charged to cutting, 80% of janitorial services will be charged to assembly. Again, so if you think back to last chapter, where it would just start you with this much of the overhead was charged to them, and then you would use the activity bases to break that up into the different I guess the different production departments along that. This is the number you started with, the amount that was like assigned to that department. Okay.
So on like financial sheet, that's like whatever the cost of janitorial services, 20% of that is
Overhead. Mm-hmm. And then the cutting department would use the ABC costing to figure out how to spread that out so they have over their products, right? Well, go back to chapter 3. Okay, the one we're just finishing. Not chapter 3, chapter, what is this? 17, 18. Chapter 18, where we're using activity-based costing to say, here's our overhead for this department. And then how are we going to divide that overhead up? Well, there's this many setups, there's this many machine hours, and they're applying that overhead in those ways. So this is just how we figure out the amount of overhead that's getting charged to that department. And then the department can use the activity bases to figure out how to charge that to the specific products. Yep. Right. 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 So this chapter is just how we're applying, how we're getting that overhead and saying how much overhead should be charged to each department, and then they'll divide it up. So in this case, for janitorial services, cutting is going to do 20%, assembly is going to do 80%. And then, oh, sorry, that was for cafeteria. No, that was janitorial. But it says janitorial again. So I don't know, that confuses me. All right. So another way, I guess, that they could do it is to do their janitorial. Oh, okay. I think they just made an error, because we'd said the cafeteria services are going to be based on the number of employees, and I think this should say cafeteria here. So cutting department has 30 of the 40, so they're going to pay 25%, 75% of the cafeteria services overhead is going to be assigned to them. And assembly department has 10 of the 40, so 25% of the cafeteria services. So once the support department costs are allocated to the production departments, you just take janitorial services, 62,000 will go to the cutting department, 248,000 will go to assembly, cafeteria costs, 126,750, 42,250. And so that's going to be, so the total cost now for the cutting department would be their own costs, which we saw in step 1, and then their portion of the cafeteria and janitorial costs, which we got from step 5. Okay, so again, I'm not sure why the book decided to do it this way, but in essence, we're stepping back to data that was just provided to us in the last chapter. Now we're showing you how they got that data. Okay, so again, this is called the direct method. And what you'll notice about the direct method is that the costs of these support departments are just assigned directly out to the production departments. So you'll see nothing is charged to these support departments. We took the full 310,000 and assigned it out as 62,000 to cutting and 248,000 to assembly. And we did that on the basis of square footage. And then the whole 169,000 of cafeteria costs, did 126,750 to cutting, 42,250 to assembly on the basis of the number of people they had. Again, what makes these so hard is there's all of this information that has to go into it. In real life, that decision doesn't seem as complicated because you're not trying to read it all out of this big word problem. Okay. Right. Right. And again, you're talking to the cafeteria people and saying, you know, what are your costs and what seems to drive them? And they're going to say, well, the more people that eat, the more our costs are. Okay, that makes sense. And so that's how we'll split it up or whatever. Yeah, like the weight, like it makes me like an episode of The Office. They like have to get the whole department together and like stand on a scale and be like, okay, the total weight of the business is 1,000,000 pounds. Your department has 200,000 pounds of people, so you'll pay 20% of the cafeteria costs. I mean, you can, no, that's just an episode of The Office.
I know, but that's
But in theory, right? I mean, yeah. All right. So the second method is called the sequential method or the step down method. So recognize that these methods are presented in order from the simplest to the most complex, and also from the least accurate to the most accurate. So the simplest method is going to be the least accurate, and the most complex method is going to be the most accurate. Okay. So this is the second one, the sequential method. So what we do is we allocate costs among, this says interdependent support departments. In other words, we just recognize that, for example, there's interdependency between janitorial and cafeteria, meaning janitorial people are still going to eat in the cafeteria. So the number of janitorial people we have is going to affect our cafeteria costs. The cafeteria has to be cleaned up. So the amount of cafeteria costs is going to include some janitorial costs. So how do we deal with that? And is there a better way? So in essence, what you do is you choose the first support department and its costs are going to flow to the second department. And then the second department's costs are going to flow forward and so forth and so forth. And then all of that will flow over to production. Okay. And I'll show you an example of that. So support department costs are never allocated back to a support department whose costs have already been allocated. That's the rule. So the sequential method captures some, but not all of the inter-supported department services. So let's look at an example. Typically, this is how we prioritize the departments for allocation: departments with higher costs, departments serving many other support departments, departments with more accurate cost drivers. Again, let me just show you an example. So steps 1 through 3 of the sequential method are the same as the direct method. If you remember those steps, the first step was just to figure out the overall costs, and then to figure out a cost driver, and then to figure out how much of that cost driver applies to each of the production departments. Like those are those first 3 steps, they don't change. So they've done those 3 steps. We know how many square feet we have in each of the 2 production departments, the number of employees, and the department's individual costs. So same process up to step 3. In step 4, though, the proportional usage of the support department is also determined. So here we recognize the cafeteria for janitorial usage uses 50% of the total janitorial cost. The cutting department, 10%, assembly department, 40%. So this is a little different because in the first one, all we did was considered the total as the total of the production departments, cutting and assembly, right? We said the total was 50. So the total was 5,000 square feet, and we calculated off of that. Here, we're including the cafeteria in this. So think about that. Before, assembly was 80% and cutting was 10%. Now, assembly is only 40% and cutting is only 10%, and the rest is going to cafeteria. And then we'll use the cafeteria's driver, which was number of people, to assign those costs to here. So what it's doing is it's trying to be more accurate by saying, let's first assign janitorial costs by square footage, but include the cafeteria in that. And the cafeteria will pick up some of that janitorial cost, and that will change its overall cost. And then we'll assign all the cafeteria's costs by number of people. So that's what we're doing here. That's the sequential method. We're doing each department in order. Again, in real life, there'd be all this conversation about what order we should do these in. In a book, it's going to have to tell you, like janitorial will be considered first, then the cafeteria. Okay. So here's the proportional usage of cafeteria services by the cutting and assembly department. Sorry, this is the janitorial services, which I just talked about. I hate that there's so much text. So in step 5, each support department's costs are allocated to other departments. The support department's costs are multiplied by the proportional usage of the departments. And in the sequential method, the total support department costs to be allocated will also include any costs that were allocated to the support department. I think that's more confusing than the way I just said it. So let's move past that. All right. So here's how it will go. The janitorial department's costs of $310,000 are allocated to cafeteria, cutting, and assembly by multiplying $310,000 by each department's proportional usage as follows. Cafeteria gets 50% of it, so $155,000. Cutting gets 10% of it, or $31,000, and assembly gets 40% of it, or $124,000. And now the total cafeteria department costs of $324,000, which was the $169,000 they already had, plus the $155,000 that they got allocated to them of the janitorial costs, are then allocated to cutting and assembly by the square foot or by the number of people, 75 and 25. So cafeteria, way back here. No, I'm not. That's going to be more confusing. So cafeteria had their costs already. Right. So all we're doing is we're allocating the janitorial costs to not just the production departments, cutting and assembly, but we're allocating them to cafeteria, cutting and assembly based on their square footage. Then we're gonna take the new cafeteria cost. Okay, see, you made me jump all around here, mister. It's not your fault. We're gonna take those new cafeteria costs and we're going to allocate those, which are their original costs plus the 155,000 they picked up from janitorial, which gives them a total cost of 310,000. And we're going to apply those, or I'm sorry, 324,000 on the basis of the number of people they had.
That 155 is their cost.
Right. Their costs.
By themselves.
Right.
All right. That's their total. That's this.
Yeah. So again, this is more accurate because instead of just saying, okay, production departments, you're getting this much of the janitorial and this much of the cafeteria, they're going to say, well, no, because part of that janitorial went to the cafeteria, and then so the way that the cafeteria is divided up by the number of people. Before, if you think about it, with the direct method, what we were doing is we were dividing it up just by square footage and people, not realizing that there was a big chunk of that square footage that was being taken up by the cafeteria. Okay, so with this method, we're including the fact that the cafeteria was actually responsible for half, in this case, of the company's janitorial costs, and that should really still be divided out by the number of people they have. Okay, that's what this method does, is it takes it down another level or another layer and gets more accurate on the costs. Not really overlap, but it just more finely, more granularly distributes those costs. So again, in summary, so we'll see under this, production actually picks up 1,778,000 of the overhead, and assembly gets 885,000 of the overhead. But this matters to you because if you're the department manager of one of these two departments, your department's usually judged on how profitable they are. And if you feel like you're picking up an unfair amount of the overhead costs, you go, my department only has 25 people. Why am I paying for half of the janitorial services when, based on square footage, when most of that is going to the cafeteria, and then the cafeteria costs are way higher for this other department with all these people, right? And so this is why a department manager, especially if their pay bonus is based on profitability, they're going to push for more granular. Unless they're the one with lots of people, then they're going to push for a less granular system, right? That spreads those costs across other departments. All right, so the final method is called the reciprocal services method. So the problem with the last one is it still had to choose to apply janitorial to cafeteria and then cafeteria to the production departments. When maybe there's some percentage of the costs that should go the other way, like apply, because there's also janitorial people that eat in the cafeteria. So what about them? So this tries to take all of those going on. So this is the most complex, and it actually involves creating some formulas or like a little mathematical sequence. Excel works really well for it, just share those costs. So really, I'm not going to get deep into formulas. I'm just going to kind of share how the method works. So steps 1 through 3 are the same again, which is to figure out, again, what our costs are and how we're going to divide them up. As far as in this, the activity basis, again, square feet and number of employees. And then support departments are never allocated their own costs, but their costs are going to be allocated to other support departments. Okay, so the proportional usage of each support department's cost driver by the other departments to which its costs are allocated is determined. The proportional usage of janitorial services are the same as those identified in the sequential method, as that was the first one. And so they're going to say, okay, janitorial department, the square footage, so the cafeteria is going to get 50%, cutting is going to get 10%, assembly is going to get 40%. But then we're also going to look at it the other way and say, cafeteria is based on people. So janitorial is going to get 20%, cutting is going to get 60%, and assembly is going to get 20%. Well, as we do that, we're going to have to sort of net these costs to each other so we can apply them. Ultimately, what we're having to do is apply them all to production departments, right? Because in the end, what we're doing is saying, these are overhead, and we need to apply them to production costs. So janitorial department costs are applied to cafeteria, cutting and assembly. So there's a total of 382,000. And then cafeteria department costs are applied to janitorial, cutting and assembly. And those are 360,000. And then we have to allocate those ultimately over to the production departments. Again, I'm going to get deeper in the weeds on the whole math of it. I want you to recognize this is how it's done. Okay. When we get into the assignment, I'll show you a thing. So again, direct method uses the least, it just says we're not going to consider the support departments as part of how we allocate this out. We're just going to use the production departments. And then it gets more and more complex from there. All right, so one other concept, a couple other concepts, is to recognize that sometimes in a manufacturing process, we have what are called joint costs. In other words, let's say we're the Vlasic pickle company, and we produce several products all with pickles. Like you might just have whole pickles, you might have pickle slices for hamburgers, and you might have, I don't know, spears. Yeah, thank you, or halves, all right. And so the cost of like cleaning and washing the cucumbers when they come in, and then brining them and soaking them, all of those costs are joint costs. And then when it goes to other stages, in one, they're not even going to be cut. They're just going to be packed into jars and sealed, right? But in another, they're going to have to be cut into halves, and another going to have to be cut into slices. And so that'll be additional production costs for those. So just recognize that'll come up in this chapter that there's joint costs in a manufacturing process, and there's usually what we call a split off point, and then the costs. And these are not for overhead, but these are often for like direct costs even, right? But you might also ask yourself, well, should overhead be applied differently to these? What you spend doing, preparing the product that's the same for all of them before it splits off into different processes. Does that make sense? Okay. There's a couple different methods we use to allocate joint costs. One's called the physical units method. One's a weighted average method. One's a market value at split off method. And another's called the net realizable value method. Don't those names just sound fun? So the physical units method allocates joint costs using a physical measure of the product at the split off point. So honestly, like what they have here is this company that's making, skincare cream, shampoo, and liquid hand soap. And all of those products use the same product base, which is mud from the Dead Sea and other chemicals. Sounds tasty, or whatever, right? You think about it, for a lot of products, you would use the same product base and then do other things to it to make it into a shampoo or a skin cream or whatever. So with the physical units method, it would just add up the total costs up to the split off point, and then figure out how much quantity of that is going to go to each of the different products, and just split it up that way, right? So 200 pounds are going to go to skin cream, which is 40% of the total. So they get 40% of the joint costs, and so forth. To me, that's really straightforward. That's an easy method, okay? You will be surprised how often, even I work at a college with really intelligent people all over. And when I talk to them about allocating things in different ways, and the most common way is just to say, well, what percentage of the whole is this department consuming of this resource? Let's just split it up that way, right? They're like befuddled by that. They're like, no, so if you're working together with another department and you have a shared marketing project, they're like, we should each pay half. And you're like, but why should we each pay half? Because you're consuming 80% of this resource and I'm only consuming 20%. And it like just breaks their brain, even though it seems really obvious, but to them it doesn't. because they don't work in these numbers. The more you work with accounting and stuff like that, the more you start to see things as often as in terms of percentage of a whole, and then applying that percentage to the overall cost. Okay. Which, just, you know, even if you do taxes and stuff like that, that's exactly how they do things. Like, so it's the same thing. So the second is what's called the weighted average method. It allocates the joint cost based on weight factors for each product. If you ever look at like a rubric for how things are graded, right? It might give a percentage weight to each area or something like that. So the weight factors are multiplied by physical units to arrive at weighted physical units. These weighted physical units are then used to allocate the joint costs. The weight factors can be based on a variety of factors, blah, 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 blah. So Davis Pharmaceutical allocates joint costs based on the mixing times for each product. The mixing speed for shampoo is 3 times that of cream and soda and soap. Thus, management applies a weighting factor of 3 to shampoo and 1 to skin cream and 1 to soap. So the weighted pounds of shampoo, 450, weighted pounds of skin cream, 200, weighted pounds of soap, 150. And then that's applied to the costs to determine which cost you want to use. So what I will tell you is none of these methods is superior to the other method. It's not like in the first one I told you, like the more complex method, the more accurate it is. With this, not really. What's most accurate is you have to look at your own process and say which one most accurately reflects the cost, how these joint costs should be shared, right? One's not better. It's just a determination by management as to what works best. Market value at split off. So now instead of looking at the cost at the split off, they're going to look at the market value at the split off. So that just says, hey, if the product was sold at the split off point, what would the actual market value of the product be at that point? So it says assume that Davis Pharmaceuticals can sell skincare cream and shampoo at the split off point. At the split off point, skincare cream and shampoo sell for $540 per pound and $480 per pound respectively. Though soap requires additional processing to be sold. Management estimates the value of $400 per pound of soap at the split off point. So they use that to figure out the total market value and then figure out what each of these is as a percentage of the total market value. So instead of just using cost, instead they're going to figure out what would the market value of these be. It's just another way to do it. Again, management might say, why are we doing this based on cost? Because soap is more valuable or something like that. Or shampoo is more valuable because we don't have to do any more refining to it and we can sell it right now for this much. Okay. So just recognize there's like, really, I think what they're trying to get at here is the knowledge that as opposed to financial accounting, where we're always teaching you one way to do something, there's lots of ways to try to split up these costs is what they're really getting at. Net realizable value method. We allocate joint costs using each product's estimated net realizable value after it's fully processed. Again, instead of just saying what's the cost at the split off point, we're going to say, hey, after we get it all the way processed, what's the amount of money that we can get from this? Net realizable value means the amount we could get from it minus all the additional costs added after the split off point. Okay. So the estimated selling price of a product less any cost necessary to further process the product beyond the split off point. They actually use nicer words than me on that one. So the net realizable value is the final selling price times the quantity minus additional processing costs. And if there's products not processed beyond the split off point, then the net realizable value is just the selling price at the split off times the quantity because there's no other cost to subtract. So here they can figure out the skin cream. They have a selling price at the split off, additional processing costs, and the selling price after. So now they can calculate the quantity times the selling price gives the total sales minus additional processing. So skin cream didn't require additional processing, gives them a net realizable value. We do that for each of them. And then we can, again, add them all up and take them as a percentage of that net realizable value. And then apply those joint costs according to that percentage. So to remember that all four of these things I just went through are about how do we apply the joint costs. Whether we just do it at the straight up cost at the time we split them off, or some other way, like how much can we get from when we sell them, which is their market value, or how much can we get for them less the cost, which is the net realizable value. It's all the same thing. It's just coming up with these percentages that we're then going to apply to the joint costs coming into it. Does that make sense? Because we're always saying, how do we fairly, if you think about it, all of this, these first four chapters have been about like, how do we fairly divide up these costs that we can't clearly put to one product or another? Yeah. So remember, so the first half of this that I went through, that was how we were going to put the overhead to the specific departments, right? Yeah. This switched gears. If you think about it, these are direct costs. So when you know, direct materials, direct labor, and indirect costs, so the total costs of the product up to that point, which is its direct material, direct labor, and any overhead applied up to the split off point. Now we're continuing to process the product, and we're saying, well, how do we take those, how much of those shared or joint costs do we apply to each of the products coming out of it? And that's what this method's for.
So like parts of the direct labor, up to a point where the labor changes.
Yep. Right. Mm-hmm. Maybe. Yeah, this is less for service because most services don't have a shared component. They might, I mean, maybe if the prep for like, I'm trying to think of a scenario like, you know, like each time a doctor sees a patient, the room has to be prepped a certain way ahead of time. And regardless of the services they provide, there was a certain cost that was the same. But usually
you could write that off somewhere else.
You wouldn't, yeah, you wouldn't bother that with that. Right. And just so you know, like for a lot of service-based businesses, that cost of prep and overhead is often more insignificant than, and so they often don't try to be as worried about figuring it out to the lower level. Yep. Yep. All right. So I think we're about done because it's a lot, this chapter, right, of new stuff. Although when you get into it, it's not horrible, I think. So again, so I always say that and then you're like, oh, it was horrible. Thanks, Fox. So skin cream, shampoo, and soap under the physical units method, you can see there's some pretty radical differences in how the allocated amounts to each of those depending on the method we used. And so again, recognize that not one of those is better. The one that's better is the one that most closely matches the production process of the company. And so a lot of times what you'll do as the accountant is you'll actually do it all four ways, right? And then sit down with managers and say, hey, let's discuss this and figure out which way works the best. And of course, the skin cream department manager is going to like this one best because he pays less of the joint costs. And so it makes him look better, right? Like his department's more profitable. But that's not really fair if this is a more accurate reflection of how much the joint costs should be applied to him. Right. And that's only because maybe his skin cream is, you know, a high margin. And so I wouldn't like this one, right? Like if I had a product where I was making lots of money on it, I shouldn't have to pay more of the cost just because I can make more at the end. I should pay more of the costs because I have more of the costs. You know, maybe skin cream just makes a high margin. So that's why there's give and take in these discussions. And often you end up with decisions that one manager doesn't like because they feel like they're sharing too much of the joint costs. Sure. Yeah, absolutely. And at some point having to say, hey, look, I know that you don't like this method because you feel that it allocates too much to you, But after meeting with every single department manager and reviewing the processes, as management, we feel that this most accurately reflects the cost. And so this is the one we're going to use, and you'll have someone that's mad at you. And well,
You find me something that drastically shows you.
yeah. But most of the time, just so you know, most managers